Have you ever checked your bank balance and felt relieved to see your money sitting safely? What if I told you that your savings are silently losing value every single day? While banks promise that your money grows with interest, the reality is that inflation eats away at its true worth. Imagine this. In the 1950s, a cup of coffee cost just 10 cents. Today, that same cup might set you back $5. So, is your money really growing? The truth is, it's shrinking in value. The good news? You don't have to let inflation rob you of your hard-earned wealth. In this video, we'll break down 6 powerful assets that can protect and multiply your wealth over time. These assets will not only help you stay ahead of inflation, but also build lasting financial security for generations to come. Ready to learn how? Let's dive in. 1. Precious metals, the ultimate safe haven for wealth. Have you ever wondered why the ultra-wealthy always seem to invest in gold, silver, and platinum? It's not just a status symbol. It's a time-tested strategy to preserve and grow wealth. Unlike paper currency, which loses value due to inflation, precious metals have historically held their worth and even appreciated significantly over time. Let's put this into perspective. Back in the year 2000, gold was trading at roughly $280 per ounce. Fast forward to today, and its price has skyrocketed past $2,000 per ounce. That's a staggering increase of over 600%. Meanwhile, the money sitting in a regular savings account has barely grown, earning minuscule interest rates that struggle to keep up with inflation. This is why the smart money consistently turns to precious metals as a safeguard against economic instability and currency devaluation. But what if you don't want to deal with the hassle of storing and securing physical gold? No problem. There are modern, convenient ways to gain exposure to gold's value without ever having to hold a single bar. Exchange-traded funds, ETFs, such as SPDR Gold Shares, GLD, allow investors to benefit from gold's price movements without the complexities of storage and insurance. These ETFs are designed to track the price of gold, making them a practical option for those who want to tap into the power of precious metals with the simplicity of stock market investing. 2. Industrial commodities, powering the future of innovation. When people think of valuable commodities, their minds often jump to gold and silver. But precious metals aren't the only resources worth investing in. Industrial commodities, such as copper, cobalt, and lithium, are the unsung heroes driving modern innovation and shaping the future of industries worldwide. Consider lithium, for example. This lightweight metal is a key component in electric vehicle EV batteries, making it one of the most in-demand resources of our time. With the global push toward renewable energy and the rise of companies like Tesla, lithium demand has skyrocketed. As nations phase out gasoline-powered cars in favor of EVs, lithium's importance and value will likely continue to grow. And it's not just lithium. Copper, often called the metal of electrification, is essential for power grids, electric motors, and renewable energy infrastructure. With countries investing heavily in clean energy solutions, copper demand is expected to surge in the coming decades. Meanwhile, cobalt, another crucial component in battery production, is playing an increasingly vital role in the technology and automotive industries. But how can you invest in these booming industries without physically storing raw materials? Fortunately, there are many ways to gain exposure to industrial commodities. Investing in mining stocks, such as Freeport-McMoRan (FCX), provides direct access to the companies extracting these valuable resources. Alternatively, commodity-focused ETFs track the price movements of key materials, offering a diversified way to participate in this high-growth sector. 3. Strong currencies, shielding wealth from inflation and market chaos. Not all currencies are created equal. While some lose value over time due to inflation and economic instability, others stand strong even in the face of financial turmoil. Currencies like the Swiss franc, CHF, and the Singapore dollar, SGD, have built a reputation for stability, making them a safe haven for investors seeking to protect their wealth. A perfect example of this occurred during the 2008 financial crisis. As global markets crumbled and uncertainty spread, the Swiss franc actually strengthened against the US dollar. Investors, fearing a market meltdown, rushed to move their assets into more stable currencies, reinforcing the franc's role as a trusted store of value. Similarly, the Japanese yen, JPY, is another currency that tends to appreciate during times of global uncertainty as large institutional investors flock to its safety. But why are these currencies so strong? Several factors contribute to their resilience. Switzerland, for instance, has a highly stable economy, a strong banking system, and a long-standing reputation for financial security. Singapore, on the other hand, has one of the world's most robust financial hubs, strict monetary policies, and a business-friendly environment that attracts capital from all over the world. These characteristics make their currencies highly desirable in times of economic turbulence. Now, you might be wondering, how can I invest in these strong currencies without opening a Swiss bank account? The good news is that you don't need to be a billionaire to benefit from currency stability. There are several ways to gain exposure. Forex trading, currency ETFs, foreign currency accounts. 4. Government-backed securities, the safest investment on earth. The world's wealthiest investors hold government bonds because they offer stability and security, even in uncertain times. U.S. Treasury bonds are considered among the safest investments, as the U.S. government has never defaulted. These bonds provide steady returns, often with better interest rates than bank savings accounts. Other stable nations, like Germany, Switzerland, and Japan, also issue reliable bonds. Investors choose them for low risk, predictable income, and protection during market downturns. Buying bonds is easier than ever. Platforms like TreasuryDirect.government allow everyday investors to purchase them directly, while ETFs like iShares US Treasury Bond ETF Gov offer diversified exposure. 5. Stocks and dividend-paying mutual funds, the smart path to steady wealth. The stock market might seem like a roller coaster, but not all stocks come with wild ups and downs. In fact, investing in value stocks, companies with a long track record of profitability, can be one of the most reliable ways to build wealth over time. Take Johnson & Johnson, for example. This global powerhouse has been paying dividends for over 60 years, rewarding shareholders with consistent, growing income year after year. Dividend-paying stocks like this aren't just about price appreciation. They offer steady returns, even when the broader market is turbulent. That makes them a safer, more predictable option compared to high-risk growth stocks. But what if researching individual companies feels overwhelming? No problem. You can still tap into the power of dividend investing without picking stocks yourself. Mutual funds and ETFs, such as the Vanguard High Dividend Yield ETF (VYM), offer a diversified portfolio of strong, dividend-paying companies. This means you get regular income while spreading risk across multiple industries, an easy and effective way to grow wealth steadily. 6. Real estate, the timeless path to wealth. For centuries, real estate has been one of the most reliable ways to build and preserve wealth. Why? Because land is finite, but demand keeps rising. Unlike other assets that can lose value over time, real estate tends to appreciate, making it a powerful hedge against inflation. Just look at the numbers. According to a Bloomberg study, housing prices have tripled since the 1990s, even after accounting for market downturns. Whether it's rental properties, commercial buildings, or farmland, real estate offers a tangible, income-generating asset that continues to grow in value. But here's the best part. You don't need to be a millionaire to invest. Real estate investment trusts, REITs, allow everyday investors to own a stake in income-generating properties without the challenges of direct ownership. With real estate, you're not just buying property, you're investing in an asset that stood the test of time, providing stability, passive income, and long-term growth for generations. 7. Collectibles, turning passion into profit. Imagine owning something you love, a vintage Rolex watch, a rare comic book, or a first-edition Harry Potter novel, only to discover years later that it's worth a fortune. Take the Rolex Daytona, for example. A model that originally sold for just $200 in the 1960s can now fetch over $200,000 at auction. Similarly, a first-edition Harry Potter book has sold for hundreds of thousands of dollars, turning childhood nostalgia into a serious investment. The best part? You don't need millions to invest in collectibles. Platforms like Rally Road and Masterworks let you buy fractional shares of high-value assets, from rare artwork to classic cars and sports memorabilia. This means you can own a piece of history without the massive price tag. Whether you're a watch enthusiast, an art lover, or a vintage car fan, collectibles offer a unique way to diversify your portfolio while fueling your passion and potentially making big profits over time. Inflation isn't going away, and keeping all your money in the bank is a guaranteed way to lose purchasing power over time. But by strategically diversifying into these 7 asset classes, you can protect your wealth, beat inflation, and create lasting financial security. Which of these investments are you considering? Let us know in comments, and don't forget to subscribe for more wealth-building insights.